Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May 30, Tuesday. Welcome back from the long weekend, and let's start working on the markets. First, with economic data, today, home price month over month, 1.5%. We were expecting 0.4%. So prices are going up month over month, year over year, still in the negative, but quite higher than expected. And the index for housing prices are going higher more than expected, 0.6% month over month, and year over year 3.6%. So housing market, it's getting expensive, really expensive. Consumer confidence, we were expecting below 100. Well, 102, good confidence, and manufacturing index still in the negative quite a lot. Look at this. We are going deeper and deeper and deeper. So is this bullish or bearish? Well, housing market getting expensive, it's a sign of inflation. Consumer confidence going up is a sign of inflation. Manufacturing index going lower is a sign of obviously slowing down on the manufacturing, at least for this index, but still consumer spending and prices are still going up, and that's not good for the long term. If we check the probabilities for the June FOMC, we are approaching 70% of probability for a new hike, 25 basis points. 1 week ago, we were at 28%. We are skyrocketing higher. Well, looks like people is still riding the AI hype, and there's nothing you can do against this because people are just freaking out with tech. This is the Nasdaq. This is Friday's move, the nonsense move that I actually have a video on that, trying to explain why you don't have to lose to FOMO. This was yesterday's. Futures don't close, so didn't close, so we just held this pre-market low, and today into the open we were just trying to break the moon. As you can see, going into the open, London open at 3 a.m. in the night, we were just super high. Actually, let me just grab real quick. We were up like 1.16%. Since then, well, we are basically rejecting higher pricing, still in the green, almost 1% for the Nasdaq, but the S&P is barely in the green, 0.16. And let me explain you why there's something fishy and some shorts are being quite sneaky. We rejected with this higher pivot pre-market high, so the continuation low continuation higher is for now not probable. And if you can see this was my trade short on the breakdown of this little head and shoulders breakdown into this low of day. We got a nice move into 14,400. Actually, that's exactly today's low of day, 14,400. And since then, we've been accumulating, actually doing higher lows into this pivot. Look at this. 1, 2, and 3 rejections of this pivot. Looks like markets want to continue higher. Nvidia is causing that kind of squeeze because if we check the daily, I mean, Nvidia is now part of the 1 trillion group market cap. We are leaving huge gaps on the daily for Nvidia, and Nvidia is quite bullish right now, 6% on the day. But Apple is also in the green, but since the open is just chopping around. Microsoft is barely in the green. Since the open, it's actually 1.15% in the red. Tesla is 3.74, trying to hold 200, coiling. Amazon, 1%, since the open is just chopping around heavily, trying to hold 120. And in the daily, we are at huge critical. Well, we can just remove this arrow because we just met our target 122. But this candle from October last year, it's a big resistance. We are aiming towards that, but Amazon is not Nvidia. Amazon, Google is also rejecting. Look at these highs, super choppy. But after this squeeze on every tech stock, I mean, you have to expect some kind of pullback. They are leaving behind tons of gaps, and those are irregularities on the price action on the market. Those need to be filled out in order for price action to be healthy, and we are just skyrocketing. I'm on the same boat that I was on Friday. Tech stocks are super extended due to Nvidia being in a ultra squeeze, but I don't see fair value up here. So you can just, as I am doing with the Nasdaq, you can just day trade these. But if you're an investor and if you are, for example, in Apple at daily levels, you are for sure filling out some shares up here. If you are on Nvidia, you are for sure scaling out up here above 400. That's a hell of a trade. This year is just, let me adjust that. It's almost 200%. Come on, guys. Do you really expect for it to continue higher? You have to be smarter than that. Amazon is also super at critical levels, squeezing out. I mean, tech stock, it's starting to become quite extended and overcrowded. Exhaustion is something real in the market, and you have to really recognize that. There's a ton of sellers today dumping shares on top of all the people that are just trying to go higher and buying every dip. You can see that on the time and sales. Sorry. You can see that on the tape on a lot of stocks and also on the futures. I've seen thousands of shares of contracts, when this thing was trying to do these famous V reversals. So just be smart and be cautious, because when you get greedy, and when you don't expect the turn, it's when something really bad happens. Other markets, dollar is in the green. Dollar is just pulling back, taking some beats. Perhaps we might have a retest of 103, but I still think our target is 105. Dollar being in the green, dollar being strong is bad for the stock market. Remember that. Yields, the 2-year yield is just squeezing higher, and the 10-year yield is just pulling back from its super squeeze. If we check the inverted yield curve, look at this. This is the inverted yield curve, the 10-year minus the 2-year. Look at this. We are going deeper into the inversion instead of going out of inversion. Going deeper is just as bad as a recession. Be careful with those things. Interest rates futures, 5.05 in December. This, along with the fact that there's 70% of 25 basis points next hike, that would be 525, 550 range. I mean, do you think tech stocks that hate higher interest rates are going to hold these levels? If you're an investor, you are looking for better deals than these ones. These tech stocks are overextended. More markets, metals, gold is quite in the green today, 1.80 after a pullback of this trend line. I was expecting this range 1920 for the 61.8 retracement. But again, we have still point of control up here and a rejection just here or another move lower. That would make a lot of sense. So still, gold hates high interest rates, and you can expect gold to continue weakening in the short term. Copper is in the red. Copper is Dr. Copper is the heart of the economy worldwide, and you can see that after the bounce of 3.56 as we were expecting, we are right now having this pullback and perhaps continuing lower. If demand slow down, if China continues to show signs of slowing down, there's certainly a fact. Look at this trend line that we are breaking down into rejection. I mean, there's a clear case for going down like this, and that would be a disaster for the economy worldwide and more for the US. Silver flat. I'm still thinking, well, this is not the case for the fib retracement, but these kind of retests that just make sense because metals overall are quite weak. Demand destruction is a reality. Is there any risk on these markets? Well, Russell is in the middle of nowhere land still after this rejection, so we didn't have any edge here. Bitcoin was quite nice into the weekend. On Sunday, it was 4.47. So actually, it was quite interesting. We broke down this area of equilibrium. We put a second bottoming tail and we just squeeze higher. Are we really trying to do this? Let me just put this the daily. Are we trying to do things like this? It may be a possibility for Bitcoin, but for sure, I don't think this just is a consequence of markets going risk on unless Russell starts also going higher. Remember that we are, in terms of S&P 500 breadth, we are super low. 40% of stocks are above 200 moving average. That means 60% of stocks are under their 200-day moving average, and this looks really bad for market breadth. This is only a market for tech and only for those 8 to 10 big tech companies that are pushing the markets, creating a lot of FOMO and hype into the retail world. This is the S&P 500 equal weight ETF. And look at this. This is nothing like the overall market. We are just in the middle of nowhere land looking pretty bearish. But when you have these tech companies, you have things like this. And certainly these tech stocks are overvalued. And these are not good deals. That's what I'm trying to defend and what I'm trying to share with everyone here. Finally, look at all these banks. All banks are in the red. So that means a little bit of weakness and concerns regarding this the debt ceiling increase. Remember that we are going to need in less than 1 week to approve on the Congress this debt limit increase. And after that, once the debt limit is no longer capped, US is going to sell 700 billions of T-bills on the market. As part of this debt limit increase, they will sell these bills on the market. What kind of reaction do you think stock markets and bonds markets are going to have? There will be, in my opinion, a ton of outflow from the stock market to those T-bills to just have a great price. So be careful because tech stocks are overextended, people is taking profits, and once this debt ceiling limit increase is done, US is going to dump a lot of money, and most probably money flow is going to go out of stocks and going for certain assets like these T-bills. So just be smart, be patient, because I think this is not a good trade location if you are going to add for the long term or you want to invest in these tech stocks. Just be patient. There will be plenty of opportunities. Look at this chart. There will be plenty of opportunities on the pullbacks. Just don't fuel these tech stocks with FOMO, because that's not good for the health of the economy and for the markets. That's just my opinion. And I think that's all. Crude oil, it's continuing lower, 4.28. Look at this. I was waiting for this fib retracement, 61.8. I didn't get the trade, but anyway, we are breaking down this. I mean, this is quite a tricky situation because right now, remember that the Strategic Petroleum Reserve, the US Strategic Petroleum Reserve, was refueling the reserve at $70 right here. So you would expect a lot of people try to find support around here. We found support here and here and here and here. Once this support is gone, what do you think this demand destruction is going to do? I mean, there's a lot of potential to reach 63 due to demand destruction. So be careful if you're trading oil and if you are trading any other commodities, because natural gas, it's also 2.50% in the red. There's no way for now. People is trying to buy the dip on natural gas, but it continues to go lower and lower and lower and lower due to demand destruction. So what do you think these tech stocks are going to do once the outflow on the stock market are gone and US starts selling a lot of debt? Well, I think this is going to correct badly. So just don't be the one that buys at the top. Just don't be the guy that buys Nvidia at 420 for the memes. Just wait for the pullback. There's plenty of gaps behind and the previous all-time high that may provide a lot of support. Be smart. Be a good investor. If you want to day trade these stocks, if you want to gamble on zero DTE, you are free to do it. But just follow certain rules for you to have a long-term career in these markets. Because these markets are sneaky, sketchy, and sometimes a lot of manipulation is going on. And right now I'm seeing a lot of divergences. I'm not the only one. I'm not a bear by any means. It happens every time. I'm not a bear because I'm a bear. I'm just a bear because I can't trade for the long term up here. I want the market to pull back to give me opportunities to take great risk reward longs. That's my job as a trader, to find good deals, not to buy overvalued stocks. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates like this one, and market recaps. On weekends, I also upload some shorts for you to take my takes on certain things, like how to trade these crazy stocks. If you didn't check my latest YouTube short, please give it a go and just feel free to give your feedback in the comments, and that's all. I think if you found these videos useful, please support the channel because it's very helpful to me. Remember that patience and discipline are very hard skills to learn and to progress in this career, but they are key for your success. Risk management is also first. So stay safe everyone, and see you tomorrow.